Hi friends, my name is Nilesh Phadke, your learning partner in finance and accounts. In this video, we will learn mainly about the preparation of the profit and loss account and balance sheet and the associated journal entries. Whenever businessman starts any business, he makes sales, incur expense, and at the end have some profits from the business. This is basically recorded in profit and loss account of the statement. At the same time, he takes bank loan for the business, make investment in FDs or other assets, also buy some computer and equipment, plant and machinery for the business. All these transactions are recorded in the books of accounts in the form of journal entries. So let's understand how to file journal entries and prepare profit and loss account and balance sheet with an example. So here we go. Introduction of the share capital into business rupees 10,000. Now in balance sheet, share capital appears on balance sheet liability side rupees 10,000 and on balance sheet asset side bank balance will appear as 10,000 as there is a introduction of the bank balance via introduction of the share capital into the business. So your liability side increases by 10,000 and your asset side also increases by 10,000 and your balance sheet tallies. Now journal entry, we will pass journal entry based on the rule of aid, ARC, LIC, LRD. Here applicable rule is aid and LIC. So aid stands for assets increases debit. So here bank balance is increasing and hence it will be debited by rupees 10,000 and hence bank balance account will be debited 10,000. To share capital, that is share capital account will be credited based on the rule of LIC, that is liability increases credit. So 10,000 as liability in the form of share capital is increasing. Narration is being introduction of share capital into the business rupees 10,000. Bank loan taken for business rupees 20,000. Now bank loan appears on the balance sheet liability side. So we will write here in balance sheet liability side bank loan 20,000. At the same time bank balance of the company increases. So balance sheet asset side also increases by 20,000. So total liability 20,000 and total asset 20,000 and our balance sheet tally. Now let us pass journal entry. Here bank account will be debited by rupees 20,000, that is this 20,000 based on the rule of aid, that is AID, that is assets increases debit. As bank balance is increasing, that is asset is increasing, it will be debited. At the same time on liability side bank loan is increasing to the extent of 20,000. So rule is LIC, that is liability increases credit, and hence bank loan account will be credited by rupees 20,000. Narration is being bank loan taken for business rupees 20,000. Purchase of investment rupees 5,000. Now in balance sheet asset side investment appears rupees 5,000 and bank balance of the company is reducing due to purchase of investment and hence bank balance is minus 5,000. So on the balance sheet asset side investment 5,000, bank balance minus 5,000, so total assets is 0. Thus the total liability is 0 and total assets is 0 and thus our balance sheet tally. Journal entry. Now investment appears on the balance sheet asset side which is increasing. So rule is aid, that is assets increases debit. So investment account debit rupees 5,000. At the same time bank balance on the balance sheet asset side is reducing by rupees 5,000. So rule is ARC, that is ARC, that is assets reduces credit and hence bank balance account will be credited by rupees 5,000. Narration is being investment made via bank balance of the company rupees 5,000. Conversion of creditors into bank loan rupees 8,000. Now creditors appears on the balance sheet liability side which is getting converted into bank loan. That means bank loan is increasing by rupees 8,000 and creditors is reducing by rupees 8,000. So on balance sheet liability side, creditor minus 8,000, bank loan plus 8,000 and thus total liability is 0 and total assets is also 0 and thus our balance sheet tally. So journal entry here is creditors account debited rupees 8,000 based on the rule of LRD, that is liability reduces debit, that is liability of creditors is reducing and hence it will be debited, and bank loan is increasing, so rule is LIC, that is liability increases credit, rupees 8,000. So bank loan account will be credited. Being creditors converted into bank loan rupees 8,000. Purchase of investment rupees 5,000 from cash rupees 1,000 and from bank rupees 4,000. So on balance sheet asset side, investment is increasing to the extent of 5,000 and cash balance is reducing by 1,000 and bank balance is reducing by 4,000. Thus total assets is 0, that is 5,000 minus 1,000 minus 4,000. At the same time, total liability is also 0 and thus our balance sheet tallies. Now journal entry. So investment account will be debited by rupees 5,000 based on the rule of 8, that is assets increases debit 5,000. Now cash balance on balance sheet asset side is reducing by rupees 1,000. So rule is ARC, that is assets reduces credit rupees 1,000 to cash balance. So cash balance will be credited based on the rule of ARC rupees 1,000. At the same time, bank balance is also reducing by rupees 4,000. So to bank balance based on the rule of ARC, that is assets reduces credit. So bank balance will be credited. Narration is being investment made via both cash and bank balance of the company. Out of total bank balance of rupees 10,000, company has used rupees 8,000 for investment purpose and rupees 2,000 used for repayment of creditors. Thus the bank balance of the company has reduced by rupees 10,000. So bank balance minus 10,000, out of which 8,000 is used for purchase of investment on the balance sheet asset side. We will write 8,000 and 2,000 is used for repayment of creditor. So creditor on balance sheet liability side reduces by rupees 2,000. This total liability is minus 2,000 and total assets is also minus 2,000, that is 8,000 minus 10,000. Thus our balance sheet tallies. Now journal entry. Now investment has increased to the extent of rupees 8,000. So rule is aid, that is assets increases debit. So investment account will be debited by rupees 8,000. At the same time, creditors has reduced to the extent of rupees 2,000. So rule is liability reduces debit, that is LRD. So creditors account will be debited by rupees 2,000 and bank balance is reducing by rupees 10,000. So rule is assets reduces credit, that is ARC, that is ARC. So to bank balance rupees 10,000 on the credit side. Narration is being investment made and paid to creditors from bank balance of the company. Company settled creditors of rupees 50,000 by paying from bank balance of the company rupees 30,000 and rest 20,000 converted into loan. So creditors are now settled to the extent of rupees 50,000. So creditors reduced by 50,000. However, bank balance only reduced to the extent of 30,000. So bank balance minus 30,000 because it is used for the payment of creditors. And rest of the creditors, that is 20,000, are converted into loan on the balance sheet liability side. So balance sheet liability side loan 20,000, creditors minus 50,000. So total liability is minus 30,000. On the balance sheet asset side, bank balance is minus 30,000. So total assets is minus 30,000. So total liability and total asset matches and our balance sheet tallies. Now journal entry. Now creditors is reducing. So rule is liability reduces debit to the extent of 50,000. So creditors account will be debited by rupees 50,000. At the same time, loan on balance sheet liability side is increasing. So rule is LIC, that is liability increases credit rupees 20,000. And on the balance sheet asset side, bank balance is reducing by rupees 30,000. So rule is ARC, that is assets reduces credit. So bank balance account will be credited rupees 30,000. Narration is being creditors partly paid and balance loan converted to balance of creditors converted to loan. Thus, to conclude, what we can say is that as a first step, you have to identify whether an item appears in profit and loss account or balance sheet. Once you identified it, based on the rule of aid, ARC, LIC, LRD, you can pass any type of journal entry. So let's understand these rules. First rule is aid, that is AID, that is assets increases debit. Second rule is ARC, that is ARC, that is assets reduces credit. Third rule is LIC, that is liability increases credit. And fourth rule is LRD, that is liability reduces debit.